On April 15, 2026, the S&P 500 closed at a record 7,022.95, finishing above the prior January intraday peak near 7,002.
That breakout did not happen in a vacuum. The compound argues that semiconductors, not software, are now setting the pace inside the S&P 500's tech complex, which marks a real shift in market leadership.
NaNa argues the rally has also been helped by a mechanical melt-up, with CTA buying still pushing exposure higher into April 20. Sunny adds that a second round of U.S.-Iran talks is likely in Islamabad in the coming days, which helped compress the energy risk premium without proving that the geopolitical problem is solved. Under the hood, the tech regime keeps changing. The compound says software has lost a meaningful share of its earlier decade leadership inside tech, which shows how far leadership has shifted away from the old software-heavy regime. That same discussion argues that high-volume selling in software may be closer to capitulation than the start of a fresh collapse. At the same time, NaNa says Meta expanded its Broadcom custom chip partnership through 2029 with an initial commitment above 1 gigawatt, reinforcing the view that AI hardware is still commanding the market's attention. The more immediate tactical issue is whether this melt-up can keep running. NaNa says the roughly $45 billion CTA buy program is expected to dry up by Monday, April 20. She also notes that most corporations are entering a 3 to 4 week earnings buyback blackout, which removes an important price floor. And with monthly options expiration hitting on Friday, she warns that gamma protection may roll off and bring volatility back into the tape. Single-name catalysts still helped the index close at a record. Sunny says Tesla completed the tape-out of its AI5 chip and framed the new design as an 8 to 10 times performance jump versus AI4. She also highlighted strong bank earnings, with Bank of America posting $30.3 billion in revenue, and Morgan Stanley's trading results beating expectations. Taken together, those updates supported the idea that both AI capex and market activity remain strong enough to feed the broader risk-on move. There are still macro counterweights, and they matter more now that the market is back at record highs. Eurodollar University says the IMF cut its global growth outlook after the Iran war and the ongoing disruption in and around the Strait of Hormuz. Heresy Financial frames the recently finalized SLR rule change, which took effect on April 1st, as a Treasury market support mechanism that could let banks absorb more government debt. Sunny also says Kevin Warsh's confirmation hearing as the next Fed chair is scheduled for Tuesday, April 21st, while 42 Macro points to Japanese leading indicators as evidence that global manufacturing may be firming rather than rolling over. So the near-term watch list is clear. Watch whether the S&P 500 can hold above 7,000, whether semiconductor leadership continues to outrun software, and whether Islamabad headlines, CTA exhaustion, and Friday's options expiration together turn this melt-up into a trend or back into a volatility event. April 15th was a record high tape, not an all-clear signal. The breakout, semis leadership, and the mechanical melt-up explain today's move. But next week's liquidity and geopolitical tests still matter. Full source links are in the description. This report is for informational purposes only and is not financial advice.